evening, and thank you so much for joining us today. We at RapidCanvas are excited to host our first ever webinar today, and we're focusing on ML and AI techniques in the area of accounting. Before we get started, I just want to introduce RapidCanvas and what we do here. RapidCanvas provides an enterprise-grade no-code platform for data practitioners to go from raw data to ML applications in a matter of days rather than a matter of months. RapidCanvas taps into the combined power of full-cycle auto ML and a whole network of domain experts to deliver high-value outcomes while eliminating the need to build infrastructure from scratch. Customers using RapidCanvas have reduced time to value by at least 80% and improved model results by at least 15%. So now let me get started with the exciting part of the day by introducing our speakers. First up is Rio. Rio is the risk director at SFR3 Fund and working in finance, and he comes from a deep background of various roles within finance. SFR3 Fund is a real estate fund that provides full services within acquiring, renovating, and rental of affordable homes for its customers. They specialize in renovating distressed homes using software-driven operations to scale a large number of small markets concurrently. Their software automates work orders, payments, and other back-office strategy. They've grown to over tens of thousands of homes in over 24 metros and are continuing to expand their operations in the South and Midwest of the United States. Next up is Fugger. Fugger is the head of data science here at RapidCanvas. And in his earlier roles, Fugger worked with equity portfolios and with geoscience data projects. And the moderator for today is Kedar. Kedar is co-founder at RapidCanvas. And Kedar was earlier at Google building fraud management platforms. He then went on to be co-founder and CTO at Simility, a fraud management ML platform. He then led risk data science platform teams at ML. Welcome, Rio, Fugger, and Kedar. It's great to have you with us. Over to you, Kedar, to kick off the conversation.
Thank you, Kavya. I'm really excited to be part of this panel. Hey, Rio. Hey, Fugger. Let me start with warming up this discussion. The talk of the town is ChatGPT, LLMs, and whatnot. So just to warm up this discussion, want to hear, you guys have been practicing data scientists for quite some time now, and you have seen the evolution of how things have progressed in the last so many years. But I think, recent times you're seeing like a step function, and the rate of growth itself has accelerated significantly. So I wanted to hear your thoughts on the talk of the town, LLMs, ChatGPT, and whatnot. What do you think?
I can start. First of all, thanks for having me. Honored to be here. This is going to be a fun topic. I think ChatGPT has definitely garnered a lot of attention recently, and rightfully so. I think it's shown that some of the SOPs or standard operating procedure tasks that we would traditionally envision humans, tutors, accountants, auditors doing, it's showing a very strong ability to complete those. The ability to have simple understanding but read raw text is a potential game changer when you think about labeled data or categorizing data. Or if you asked ChatGPT to read and label genre of tons and tons and tons of text, it could do so far better than what we used to have the interns perhaps do to build our models for. So I think it's intriguing how it will empower itself or empower AI itself, in that ChatGPT can accelerate the ability of its own acceleration of AI growth as well. So it's rightfully turning some heads and catching some people's eyes, I think.
Cool. Fugger, your thoughts?
Thank you, Kedar. I think ChatGPT provides a revolutionary opportunity for data scientists. As a data scientist, I think we should not be afraid of AI to take over us. Right? There's no such things. Right? Well, I think the best attitude is try to embrace a revolutionary tool and use it as a companion to make us work more productive. So that is just my view. Thank you.
Cool. Yeah, I wouldn't get into the heated debate of the ethical side, and that itself is a lot of it's worthy of a conversation in itself. The ethical side of these LLMs and AIs in general. But yeah, so now coming back to our exciting topic for today, the applied AI ML techniques in accounting. Rio, I'll start with you. I mean, you've worked in this space, in data science space for quite some time, but more interestingly, you have solved ML AI problems, data science problems across verticals from risk, logistics, payment, banking. So you have gone across multiple verticals, and I'm sure you have kind of learned a lot of techniques and applied techniques specifically in each of these verticals. And now you have embarked upon your journey in the accounting and financial space. So love to hear your vision coming into SFR3. I'm sure you're, in this space, you see AI as a transformative tool, right? Like, it's no longer the digital transformation. We are talking about AI transformation in most businesses. So to that end, love to hear from you, like coming into SFR, your vision and some of the challenges, opportunities that you see in the medium to short, long term.
Oh, definitely. And have worked in different realms of finance, payments, risk, intermediaries, marketplaces, and now real estate with SFR3. And common thread in finance has been that the data is often messy, and that typically the data outputs are not standard for structured data or data science, or even conventional BI tools, because you have compliance specific business requirements that come in, or you have GAAP standards that are counting that is not the same as how many people would consume data. So it has led to see a lot of customized solutions, or you have proprietary solutions or proprietary tech to solve needs, because people feel that their businesses are too custom for a cookie cutter solution. And then, of course, in the finance world, people say, well, it's secure information we can't share. So the combination of wanting it to be considered a sensitive set of data and the belief that our accounting is special, or we have very odd business practices, often true, has led people to not think that these modern cloud-based tools or open source tools or open data can apply to this arena. And I think that needs to be challenged. And I think it is now being challenged as people understand how to use cloud in a secure way, how to have data meet these more unique use cases of dealing with a general ledger, or dealing with debits and credits, or dealing with bank feeds in these, antique ABSI and BAI formats. But, more and more those translators into a modern Snowflake tool can read that format is coming online as all of the interfaces and operability of data tools are coming online. So as I came into accounting, and the challenge of the job was to scale the business and reduce the amount of costs variably in bringing up a real estate business that's going to manage tens of thousands of homes and process payments for tenants, expenses, vendors, financing in a robust systemic way, so we don't have runaway bookkeeping costs. Obviously, I immediately went to using ML and AI techniques, categorizing, rubrics, dictionaries, labeling, trained data. And the challenges obviously become accountants aren't used to foreign keys, structured data, SQL. They're used to credits, debits, ledgers, journal entries, income statements, spreadsheets. So for those that may speak of bringing people onto modern data stacks, or bringing people from on-premise to cloud, that they think is a 10-year, 15-year past challenge, it's live today for accounting still, very much so. When you talk about people coming from on-premise QuickBooks instances, which are used for surprisingly large firms, as we discovered with the FTX fallout, for example. I think that my vision was to try and say, we can do this robustly, we can do this systemically, and we can do this in a scalable way. And so that's why I was very excited to partner with you guys with RapidCanvas, because I said, let's take an approach here of discovery, let's take a disruptive approach, and let's take a data-based approach to accounting challenges and see what we could do. And I think we did pretty well, so it was a fun time.
Thank you, thank you. Yeah, it was a pleasure partnering with you, Rio. So, I mean, I really like the way you put it. Right? There's a set of tactical challenges here in terms of solving today's problem. Data sources, data quality, and whatnot. Cloud on-prem. And then there's a strategic side as well. What you were mentioning is like, hey, how can we think about it longer term as well in terms of disrupting the way we are kind of used to doing things within this space. So getting deeper or getting specific into these techniques itself, right? Like translating your vision into reality. Let's go deeper into it, right? So I love to hear to open this up like for Fuga is whenever you're looking at a data science problem, right? You have a set of platform tools, techniques that is going to help you. Specifically in accounting, and I know you have background in accounting as well, Fuga. Can you talk a little bit deeper into how did you approach this problem in with Rio's vision around how we want to get there? Love to hear from you, Fuga. How do you approach these problems typically, and then kind of break down the techniques that you used in this particular case? Fuga, over to you. Fuga, you're on mute.
Thank you, Kedar. I think I have four major points I want to address for this discussion. One is data exploration, and it's where we have explored the accounting data and see the quality of the data and the integrity of the data, and especially where I try to make the connection between our database and the RapidCanvas platform. And also, we are doing the data matching in ML. This is where we are applied unsupervised and supervised machine learning on the accounting data, try to make the translation and conversion. And anomaly detection is a side effect. We find that it's a side effect that it's a surprise. When we are doing matching, we try to say what is a human error, right? By analyzing the historical data, so we can tell what is historically booked the correct way versus redundant or inconsistent way. And finally, I'm going to address the accounting part. So the first one is data exploration. We have putting the data from the database and try to the large context of our this is that phase one of this SFR3 project. We are focusing on the large-scale accounting translation and automation. As Rio mentioned, SFR3 is a private equity fund over $1 billion asset under management, and that manage over 10,000 real estate properties. So each month, think about each month, millions of records are generated in the accounting database and need to be processed and formatted in a consistent way. This is a foundational work allows the fund to track all the activities related to each properties, serving as the basis for the future advanced analytics and AI. So this is only our phase one for this project. So we analyze the data sets received from individual property management companies, referred to as PMC. The ingested data contains property details, account information, rental amounts, payment dates, and more. So we compare how humans translate this information into historical accounting system records. So that will be our step two, which is data matching and machine learning. So data matching is basically trying to say, okay, the PMC company tries to record one item as rental income, while in the fund will require, under the requirements of the fund, it will require us to book it as rent income. So rental versus rent. So that is slightly different. So such kind of things that where we have to match these two items from the PMC to the fund. So the matching algorithm employed either the heuristic approach or a machine learning approach based on the complexity of the problem. It is worth mentioning that we always have the balanced debit and credit amounts during the matching process. So simple matches such as, sure.
So sorry, to stop you there. You just wanted to add a few things, right? So one, you talked about data exploration and understanding, the data itself from both data quality. So part of it is you are informing the data around what's good data, what's bad data, and so on. And part of it is the data informing you, what are the processes, what is, what's the descriptive all about, right? So both have to go hand in glove. One thing I wanted to tease out was, people talk about data quality from a statistical sense, which is required, which is part one of the problem. But data quality, data exploration from a domain and context sense, right? So maybe Rio, love to hear your thoughts. Is from a bookkeeping point of view, how do you see data exploration step as to understand the data quality, but also kind of the book's quality? Do you see that the subtle difference where you're applying context and you're applying the domain principles onto the underlying data?
Yeah, this was a very apropos question to the particular task at hand when we first began this project. Traditionally, we had our property management companies, what we call PMCs, send over our results of the activities of the properties they manage on our behalf, the rent collected, the repairs conducted, the expenses bore, etc. We have to translate that from their record keeping as a custodian of our assets onto our results on our book. This has traditionally been done by a bookkeeping firm. Traditional bookkeepers take a subledger of a portion of your portfolio and then book it onto your general ledger. The concern with this is that there's no explicit tie, there's no primary keys, there's not reconciliation from a data perspective, there's reconciliation from a bank perspective and from a custodial assets held on behalf of perspective. But if you were to say, okay, give me which transaction in the ledger is the transaction from the custodian statement that they gave us, they would have to look it up manually. It's not where you would expect transaction ID, journal ID, join, as you would see. We had to create that explicit join to even be able to give us the compare and contrast. So that was first done using some ML techniques, some natural language processing. The RapidCanvas team was able to apply a Levenshtein distance algorithm to try and get similarly named chart of accounts, but not exactly the same, where a SQL join would not work, but a fuzzy join. Those type of techniques were applied to give us an actual match set. Here's what your input data is, here's what your human output was, and we can actually make the tie. That gave us the training set data to know this is what humans have done. If you wanted to replicate this human activity with an algorithm, how would you do it? I.e., make yourself a recharting or a chart of accounts map on how you are moving one ledger to another ledger. A very basic finance exercise, but entirely asking, instead of an auditor or an accounting team through a migration to do it, asking ML to do it. We were able to do that. But on top of that, we were able to discover humans are wildly inconsistent. Sometimes they capitalize these expenses, sometimes they don't. Sometimes they apply these as expenses instead of assets. And it's inconsistent for the very same line item for the very same vendor based on which bookkeeper interpreted which SOP that you gave them. So we were able to see dominance of most humans interpreting in a particular way, establish that as the preferred way, and then standardize the booking. So instead of having an esoteric book to understand what will this look like on our book, depends who books it, we were able to do scenarios of, if we had perfect alignment to this scenario, if you made the line not a human judgment, but an arbitrary judgment here with a dictionary, what would your book change to? What's the net impact? How much under-recognized capitalization did you have in the last quarter if you were to apply to this new accounting standard? Almost immediately, which was an unexpected outcome, mere weeks, not even weeks, days into the process of discovery. After that is when we could then, and this speaks to the anomaly detection, when we could start saying, make a standardized algorithm that applies our preferred accounting methodology. Book in this fashion became the very next thing that we looked at with establishing an accounting bot to replace the human process, now that we could learn what the human process had done for months with this match set that we created for ourselves, not having training data explicit. because it's accounting. So that was a really interesting exercise.
That's fantastic. So Fuga, coming back to you, I mean, what Rio called out, right? Like the applying these algorithms around matching, and then applying that matching model to further find out anomalies. Would you be, can you share your thoughts around how you kind of approach that problem? Right? You talked about, uh, you know, bringing in libraries, putting it all together. So can you talk more about the anomaly detection piece and the accounting bot piece?
Sure, sure. The matching algorithm is employed either heuristic or machine learning approaches based on the complexity, right? As Will mentioned, we have to just matching the accounts from a PMC company to the fund. So we are doing fuzzy matching or NLP matching, depending on the problem. Sometimes we have a single words from eviction cost to legal fee, or rental income to rent income, or kitchen sink to general maintenance. These are like the A to B mapping where we have to apply to during the process. So they were also like a complicated one, such as we have to have a description of the account, like a sentence, and we're gonna translate that into one category. In that case, we can apply the state of the art NLP models. We are doing the BERTS model. We can even apply the ChatGPT using the latest ChatGPT. So that will different level of complexity. We can handle them in different algorithm. So this will result in highly accurate final confidence in data matching. So once we have the data matching from the historical data, we save the dictionary for future deployment. And the anomaly detection coming in is where we involve applying the generated dictionary to historical data. And we try to identify the accounting records that did not match the projected results. So this will allows us to pinpoint the inconsistency and redundancies caused by human error. For example, we discover cases where water expenses were billed both as utilities and sewers or landscapes. So humans are so inconsistent that a notable example involves matching the entire 2021 records for the year and applying that dictionary to 2022. So we reveal the numerous mismatches. It turns out that the property management company has switched to a new accounting system in 2022. So leading to all different accounting firms. And for accounting bot is that once we have final matching framework that was established for each property management company, so data could flow into the platform more automatically. Right? So in that case, we can build so-called accounting bot, and the matching process could be performed without human intervention. So this enabled SFR3 to have a clean and a comprehensive view of their accounts, with each company in either the QuickBooks or NetSuite platform they are using. So achieve automation, we also build the pipeline in the RapidCanvas platform, minimize the need for manual intervention. Again, the pipeline was scheduled to run automatically every month for accounting purposes, pulling the data from Snowflake, performing the processing and transformation as a pipeline, and writing back the desired results to the Snowflake and NetSuite databases.
Yeah, Fuga, thanks a lot. I think you brought out a few very important pieces, right? So one I would like to point out that historically human labeling or human intuitions or human process was considered absolute. That's a classical. That's how I learned data science is like, hey, human labels are absolute. They are the ground truth. They are the truth. And model is kind of learning from humans to mimic that behavior and then apply it, right? And over the course of at least my lifetime, I'm seeing that paradigm shift. I wouldn't say 180, but it's shift quite a bit. Is well, humans are not always right? Well, machines can learn from what you are saying, but what you're really saying might be different from what the data actually is, right? So there's a huge paradigm shift in terms of how we see label data, how we see structured and unstructured data, and then machine is not just learning from human labels, but machine is kind of informing humans from the data. So that I see is a huge paradigm shift, and I'm glad we are in an age where we can scale using data and not just limit ourselves to human intuitions. That's really strong, and we kind of use that here to exactly find out errors in human processes, right? The second part you kind of mentioned, Fuga, was putting it all together, right? Like you have these great algorithms, you have these great techniques of ML AI, but just purely in terms of applied ML, in the spirit of that, um, you know, it's as much important to put all of that together and productionize your ML pipeline. Without productionizing it, it just becomes like a classroom exercise of trying it out. So wanted to open up the stage to talk more about how to put things together, namely things like you talk like getting data from different backends. While in flight, you're kind of transforming it. While in flight, you're predicting certain things, finding anomalies, pushing it. So all of that, putting it all together. Love to hear both of your thoughts on. So I can start with Rio. I think as your process, um, not only the accounting process was manual, but the pipelining process of data moving from here to there, and all of that I would assume was also fairly manual in nature, right? So love to hear your take on how automating all of that kind of helps you, and how do we orchestrate all of that?
Right, precisely. We received data formally from the PMC companies. We could look at it. We handed it to the human, said, please put this into QuickBooks. Then we could look it out of QuickBooks, for example, prior to our migration. But how is it complete? How accurate was it? Do we have any metadata reporting? If we think it's wrong and we should have more money with our PMC companies, can we produce why, or track back in our financials why it's not matching when they send us a statement next month? This was questions that we'd want to answer and need to answer, that typically would involve a human going and checking the books, auditing and reconciling. But when you start bringing in orchestration, you start bringing in structuring the data, bringing it in, making these matches, those exercises become faster. Those exercises become consistent and systemic. How much money are we missing? Depends on the auditor. No, it's the same, because it's the same systemic process that we're saying is the matching. The other thing that comes into play is, as we discussed previously, we say that this is our policy on how we record. We would want to be audited to that effect. How assured are you that you are following that standard? We told our humans and they're graded on it. No, we ran the algorithm. That's the only way we book. Here it is. You can rerun it as well. This is the accounting standard that we have selected to book versus for accruals, for revenue recognition of concessions, whatever be the case. We now can definitively say we are consistent in certain ways. So we did go ahead and elect to book the last quarter of 2022 at the time using RapidCanvas's processes for one of our PMC companies, so that we would know that we would be fully consistent. And this is, of course, of extreme value to us, because most of the time, of course, finance wants to reconcile. But if you are in the process of a migration, or perhaps receiving assets back from a custodial property management company, auditing and making sure that they have all the right assets and that you're getting all the assets back on handoff in all the right places becomes a very important exercise. So we were going to have to do the exercise anyways. Being able to ensure, as we do the exercise, we are consistent in our opinion relative to our custodian's opinion is of great value as well. So to your point about the human is always right, yes and no, right? It's changed a little bit. Very much it used to be humans go label a bunch of pictures. Now we can make a model that can recognize broccoli. Humans always right on what broccoli is. Sure, broccolini shows up, they don't know it. And all of a sudden the gray starts sneaking in. Accounting's perfect for that. Everything that we do for turns is maintenance. No, they did water damage. You put in a new floor. You need to do a write down off of that. And you actually need to capitalize that and take a new 5-year. Well, of course we are. We're following accounting standards. 76% of the time you're not, according to your historic. These are amazing. This made up numbers, not real, but I'm just saying these are those things we were able to immediately show to my team from the product and the exercise that we did, which gave the confidence to them to say a month into the project, book our quarter. You've proven you're outperforming the humans in consistency alone. So that was very powerful, and I think showed the rapid impact aspects of things, which I was really happy with. But then, yeah, Fuga, great job as well. Piecing the stuff together, and you can, if you want to talk about what it took to kind of make that happen fairly quickly to get the quarter put in. Thank you again.
I mean, Fuga, the part of data sources, orchestration, part of all of that built into RapidCanvas platform where you can connect to QuickBooks. Maybe you want to share that piece, is like how you were able to put that together so rapidly, given all of the capabilities of the platform. Love to hear that, Fuga.
Yes, sure. We have talk a little bit on orchestration. So like we mentioned above, data orchestration involves pulling accounting data from different property management companies and transforming it into the data that is one standard format that required by the SFR3 fund. So that makes data analysts quicker because you won't have to spend time manually reconciling data, right? That is a big part of accounting. Because each property management company has a drastic different accounting system. What we did first is to build a separate pipeline for each company, and all these pipelines will be pointing towards the same destination, which is the SFR3 fund. So later, we are also optimizing all the pipelines by merging and generalizing similar steps that will perform faster and cheaper. For data sources, as Rio mentioned, tons of PMC companies under their management. So, but we have for RC, we have mainly one data source, which is Snowflake, because Rio have done the heavy lifting job for us, and our output sources will be Snowflake and NetSuite. NetSuite is a key value pair, key value NoSQL database. So we have to transform the SQL type of database into a JSON payload. For the final output. As for build and productionize, we build and productionize are both on the platform. So build pipeline is basically doing the historical matching and machine learning, like I mentioned before. So the output of the build pipeline is to generate the dictionary that will be pushed to the Snowflake database. And what is nice about this is that it's not a static dictionary. Rather, it is a dynamic process where a user with expertise can manually override that has been learned from the historical matching and make this dictionary more accurate through time. So once we have once the team is happy with a modified and finalized dictionary, the production pipeline is going to use a final dictionary to make the account booking and transformation process forward. Again, by adding expert oversight based on the historical matching process, we can maximize accuracy and consistency for every property management that we book. Going back to you, Kedar.
Cool, thanks, Fuga. I think you brought out a few key points there, right? So just to summarize, and so one was, getting all of the data from different data sources, bringing in the expert opinion at the right time, right? Throughout your ML journey, you're not only using, as Rio said, right, ML experts at the beginning of the journey where their label data is useful, but you're also bringing experts throughout the journey whenever required. It's like, hey, this is the output. Can you sample it? Can you look at, hey, is this accurate? And then putting that into a feedback cycle in such a way that your model is consistently improving. There are two techniques there. One is an expert oversight, where expert is jumping in and kind of helping through the process of learning. The other technique, of course, is experts do what they do, and then the model learns from their action independently, asking them to give feedback. So the feedback mechanism is very key, and that's an interesting piece, Fuga, you talked about. The second part is Rio. You mentioned that there are so many different. It's somewhat of a marketplace, if I may. It's like you have property managers, you have properties. Many of these properties are in different states, across state location. So as you kind of build and productionize ML pipelines, many cases it's not going to be one size fits all, right? So you want to parameterize these pipelines. You want to add in the treatment. It's like, hey, my accounting principle has not changed, but it's tweaked a little bit. What do I do now? You don't want to go into Python code of notebook and find out the right place you want to tweak it and so on. You want to kind of give a systemic approach to your pipeline. So maybe Fuga, you can talk about like the parameterizing pipeline and how key it is to parameterize so that you can rinse and repeat this in a more programmatic manner. Like, hey, I want to run this for Texas versus I want to run this for California. And here are the two things, variables that I want to tweak. 98% of the things remain the same. Go ahead, right? Or I want to change this for single family residence versus condos. Change this and run. So, Fuga, your thoughts on parameterizing the pipeline?
Sure, sure. So when we are building the pipeline, right, we provide maximum freedom for parameterizing the machine learning pipelines. For example, the user can pick what property management company they are trying to match. As Kedar mentioned, this could be like geographic region or from different subsidiary company, and we provide the time frame. There in probably you want to run this on yearly basis and monthly basis and quarterly basis. So also the matching process can have multiple algorithms. We can have simple fuzzy logic. Maybe we can have NLP. We have deep learning. We can have ChatGPT. Right? We can have choose different scenarios. We try to map here. So we also have the customized SQL query from both transaction data and matching dictionary. So the matching and transformation will always be up to date. So by parameterizing ML pipelines, we can have more the full control of what we want to show and what we want to experiment. So this is the beauty of our RapidCanvas platform. Going back to you, Kedar.
Thank you, Fuga. Yeah, I think I'm just going back to what Rio mentioned as the strategic and tactical vision he had. One of the strategic visions, Rio, you talked about is like also future proofing yourself, right? Like your today's problem is solved, but if you were to resolve the problem or you want to modify that problem, unless you have capabilities in the platform like scenarios, right? Like multiple pipelines, like parameterizing it just gives you a lot of capability on the platform for you to then say that, hey, it's no longer a technical problem, right? You're using tools, but it's not a technical problem, it's a business problem. Like if you say that, hey, I want to rerun this with these business assumptions, your system is not parameter. I'll give you a good example, right? When people talk about parameterizing ML pipelines, they say, hey, how many number of trees, what should be the tree depth? It's like, no. Let's not, let's go above, significantly to a business layer of abstraction and not the technical layer of abstraction. It's like, hey, run this ML pipeline where the interest rate is 4% versus the interest rate is 3%, and then I want to see what gives, right? So this is a kind of a mind shift change, which I remember 10 years ago was not possible, right? Today, with the amount of compute, with the amount of libraries that's out there, it's so easy to kind of parameterize these from a systems point of view, where parameters are business assumptions. So really excited, Fuga and Rio, that you were able to build all of that within the platform so quickly. I wanted to move the discussion into one of the often disliked element of data science is they want to write code. They want to, we as data scientists really like our notebooks. We really like our analysis, but we often miss out on the decision maker, the business user. So off late, that trend is very strong, where you're always building data apps on top of your machine learning core pipelines. And then by data apps, these are essentially tools or workflow tools that you're giving it into the hands of end business users. It's like, hey, I want to run this. We talked about, right? These parameters, these inputs. Tell me how it will function. So Rio, Fuga, maybe I'll start with Rio. Your thoughts on how do you see it useful to apply a data app on top of your core pipeline, where you're abstracting out all of these complexities of your machine learning pipeline and only giving the right level of abstraction to the business user to play around with the underlying pipeline?
Yeah, I think it's a great question, and something that came up during our process here. So in finance, when you're migrating accounting systems, as we were or are between QuickBooks and NetSuite, you inevitably may decide to do what's a recharting, where you rechart your chart of accounts where your general ledger items are recorded. We were actually going through that process as we were going through an accounting system migration. So this is where the expert oversight comes in as well, saying, if I agree that historically we charted it this way and this is what you have learned, but I now choose to want to override and book in this fashion with this recharted definition of ledger, do I have to reconfigure everything? Do I have to go into Python code? Am I going to have to do a change order? We were able to parameterize that. This speaks to the dynamic dictionary that was spoken of by Fugue before, where we could say, you define your chart of account mapping, you define your recharting, and then I will show you what that recharting will look like. And I will show you, you need to define these 3 additional items that you didn't define in your rechart. Otherwise, I will have these entries I cannot complete and be mutually exclusive, collectively exhaustive, to make sure that I'm booking your entire set of transactions. We were able to bring that into a Streamlined, where an end user, a finance expert, could come and say, here's how I believe we should rechart from our old ledger to our new ledger. Did I complete the task? Is the dictionary complete? Do I have full coverage? Yes, no, show me, go back and correct. Okay, I like what I've done. I like these overrides. I don't want you to follow history anymore. I want you to follow my direction here. Save that new definition to Snowflake. Next time we run the pipe, use said definition. We were able to kind of bring that up to a Streamlit app as a prototype. That proved very powerful to be able to quickly iterate, quickly do scenarios, and go to non-data science experts and say, here's the recharting we're doing. Here's the output of doing this recharting. Here's where we're going to take this up from child to parent. Here's demonstrating a very finance business domain explanation of what's going on. Not, we're parameterizing an ML model that does a recharting as a dictionary. No. Here's the accounting exercise. Here's our recharting. There's a pipeline that does it later. Bringing that up to the business task was critical, and I think demonstrated what is it doing? Because always the task with non-DL people, cool pipeline, show me it. No, it just runs in the server in the back, and it just spins data and then writes to a DB. So what am I looking at? What do you mean? This was great to show them. Here, it's redefining. It's letting you change. It's letting you show what history is. It's showing you what additional definitions you need to define, and then it's letting you save and apply. That opened a lot of minds on my side to, I get it now. So it's very powerful to ensure that you are allowing the non-data person to engage into the process here. And that also increases buy-in, but also ensures that at the end product, the client is getting the delivery they expected. The auditor understands, the accountant understands, the controller understands what were you supposed to do for me, at least. Now, when I come in and see the results, I have my expectation. That had always been difficult in data science. So what's the expectation? I'll be 99% right. So do I get it or not? No, 99%. So what am I getting? The accounting is very good. You're getting a recharted book. Here's the end. Here's the book recharted based on this instruction. Happy? Yes, no. It became more business, to your point about bringing it out to what is the output. It was easy in this case because we have accounting, but also the product having that streamlet to really visualize what the pipe is doing, I think was very powerful in our case.
Right, and Fuga and I, we always used to discuss that, right? Like in the sense, data scientists spends a lot of time building pipelines. There's a lot of time on the notebook side, but then when it comes to kind of showcasing to the executive around, hey, what was done, it becomes a little bit of a challenge to go and show Jupyter notebooks, right? Like you want, that explainability from a business lens that goes along with data apps. Other thing, what you talked about was often data apps are misconstrued as BI platform, and BI platform is of a reporting tool. I think that's another mind shift change that has happened in the recent years. Is you're not just looking at what has happened, but you're influencing what you want to happen, right? And it's a small change, but it's a huge change in terms of what value it unravels for the business user. It's like, don't tell me, I don't want to hear my last quarter's report. I want to see, if I do this, what will happen. I want to see from a business lens what will happen. And I think that part of data apps is really, it's very powerful to have it bundled with the core ML pipelining platform, so that way you're not shifting, you're not changing context, but you're having a holistic view. Of course, the explainability, and I'm sure Fuga has lot of insights to share around explainability of the models and Shapley plots and monitoring and all of that. I think we can keep that at a later date. But I wanted to come back to you, Rio. I think just in interest of time, a lot of these things that we talked about, and we set out the goal that, hey, you want to see this in a platform where you can rapidly get time to value, and you had these key metrics around what you want to see from this engagement. So love to hear from you your thoughts on how do you see measure success from an ML platform, and how do you see that translating, our key value being time to value, iterate quickly, and so on. So your thoughts on how do you see this panning out from your expectations?
Oh, for sure. First of all, I just needed to feel that I could get control over the streams. When you start trying to come in as a risk manager and assess, as we discussed a little bit, quality of book or the quality of the accounting systems, the finance data, you can take it from a data approach perspective, from a DS perspective. We can also take it from a risk, audit, and finance perspective. So my first prerogative was certainly just, if we start introducing systemic control, if we start introducing rubrics and aggregation and validations, that's going to get me where I can start applying more value add. And I think that the tools such as Snowflake and moving to more robust accounting systems gives me something there, but it didn't give me the ability to start, what you're saying, impacting it. It let me start seeing what the humans were doing. Now I can finally aggregate the report with high dynamics using a cloud-based DB, chop it up in more unique ways than QuickBooks is offering, because I'm getting it extracted and processing it, but I'm not impacting it. Once I could say, can I replace the ingestions? Then I can impact it. How will I get approval to replace the injections? I have to show that I have a competitor, champion challenger. It's, normal project management in that way. The ability to do that so quickly, it speaks to your point of adding value, to demonstrate, here's current performance. I can now see it. Here's my predicted performance if I ran this algorithm. Not good enough. Adjust the algorithm, make more management. Is it good enough now? Yes. Now you're approved to replace the humans. Great, cool. We were able to get that quite quickly. And then once I have that, I'm opening up time. So it's cost savings. So obviously, whenever you talk about a SaaS, a vendor product, any type of platform, you are obviously going to look at ROI, and it's also cost to pay back. How quickly do I recover that ROI? In this case, we had, a clear target of saying, if I can outperform the humans and replace the humans, I free that human's time. That is a cost savings. And more importantly for us, that we can reapply that human labor to a more high value bookkeeping task, properly looking at collections rates, going and doing appropriate amortizations, not simply just cross-entering a ledger, if I can take that off your book. So that was a big deal. And then the last piece is, when I start making more complicated assumptions, when I start doing more robust accounting practices, bringing us from cash to accrual, when I start doing allowances, can I do this in a defendable way? Can I do this in a data-driven way? Can I do this in an audit-defendable way? When I say I should take a 2% bad debt allowance, why? How? When I say this month it should be 2.4 instead of 2, am I justified? This now is that last piece where we can say, if I've established systemic control, if I have consistency, if I have the ability to impact actual results, i.e. I can make bookings directly, not just report the news on bookings, that intelligent bot saying, I can more accurately place your allowances for your expenses to smooth out your P&L to have a more business impactful report. I can be closer in alignment with GAAP. I can be closer in alignment with accruals, and now I can get your debt rated. These are game changers to the bottom line. You're talking about reductions to interest expense. You're talking about being able to do additional fundraisers with different investor classes when you can produce fully GAAP compliant, not just cash based financials. So there's real business impact, real monetary value, both at the micro level by just reducing bookkeeping value, which is the initial justification to get on the hype, but the strategic larger values are still left to be had in the future. And I think the foundation is critical to be able to obtain that. You wouldn't be able to skip right to that. Getting this underneath gets us there. And that's what gives me excitement that there's still more meat on the bone, shall we say, to go after here with what we've started.
That's a very, very nicely put. Fuga is already excited on the intelligent bot pieces. I think all the recent development with LLMs and ChatGPT, I think we're able to go in the right direction where unraveling these processes, data-driven processes with intelligent bot would be the next wave. And intelligent bot in the old sense was purely automating processes, like what you would call as an RPA. But intelligent bot, the way we see it is aware, right? It's not just responding to automating processes, but learning processes, being aware in that sense. So very exciting times ahead. We are all excited to embark upon that journey where we are adding value in this space. We are building our fantastic platform and creating all of these capabilities within the platform, so we can achieve that goal. Save cost, quick time to value, and iterate through the process. I think we are nearing time, so just wanted to be cognizant about our time here. Really a great pleasure talking to you, both of you guys. Thanks again. It was a fun discussion. Any last minute thoughts, Fuga, Rio?
And thanks again for having me.